We are waiting to get live, and we are live now. Hello, everyone. Welcome to Business Learnings. In this video, I'll talk about the IL&FS crisis that happened in September 2018, and it is still affecting us, and it is going to affect us for quite some time to come. So it's better to understand it. And in this video, I'll talk in very basic terms so that even a layman can understand this crisis. Uh, so what happened was there are NBFCs, non-banking financial corporations. There are banks and there are NBFCs. There is a difference between these two. Banks are governed by RBI. They have a lot of rules and restrictions imposed on them, whereas the NBFCs they have more of a relaxed regulations. They do not have such stringent regulations upon them, and they cannot accept deposits. For example, banks do accept deposits. NBFCs cannot accept deposits. In most of other manners, NBFC is similar to a bank. So NBFCs they raise money. Okay, they raise money from other places and they lend money to people and businesses who need money. Okay, similar to bank, which raises money by because people deposit their money to the banks. Okay, that way they raise money and then they give loans to people and businesses, and they earn interest on that, and they give interest to the people who have deposited their money, and the difference is net interest margin, which is their profit, right, which is their income. uh, what happens in case of NBFCs? They cannot accept deposits. So how do they raise money? They raise money by selling debentures or commercial papers or taking loans from banks. Okay, selling debentures and commercial papers to mutual funds, to other financial institutions like LIC. You know, IL&FS. LIC had a huge stake in IL&FS. Right? So pension funds want to keep their risks very low. That's why they invest in these uh, NBFCs or fixed income securities, which can give them uh, you know 8 to 10% of return with not as much risk. And I'm talking about the time which was prior to the NBFC crisis. That time, uh, all these NBFCs they were rated AAA. What do we mean by rating? So we have several rating agencies in India. For example, CRISIL, ICRA, Care Ratings. Their job is to rate companies, rate firms, so that uh, other people, other financial institutions, us retail investors, we get an idea about how good this company is. If the company is rated AAA, it means I can buy this company's debt papers, debentures, and this company is not going to default, right? If the rating is triple B or double B or B, it means it's little bit risky to buy these debentures, and C is more risky, and D is default grade, which means do not buy. This company has defaulted, right? So this was the situation, and prior to the crisis, all these companies were rated triple A, which means they cannot default. They have the highest quality commercial papers. So commercial papers are piece of papers, right? And in that piece of paper, it is written that you know, uh, take this piece of paper. NBFC says, take this piece of paper, this commercial paper, give me money, okay? After the maturity, which usually is about 6 months for commercial papers, after 6 months, uh, I'll give you back the money plus some interest, and you give me back my commercial paper. Okay, so it is kind of like IOU, right? Uh, Now I have two situations. Just tell me which one will you prefer. Uh, I take a loan from you for 30 years. Situation one. Situation two. I'll take a loan from you for 6 months, just 6 months. In which case are you going to pay me a higher interest rate? In which case should I pay higher interest rate for 30 years, right? Because a lot can happen in 30 years. I can simply disappear. I can go to another country. I can default on your loan. A lot can happen. Therefore, risks are higher for long term debts and risks are lower for short term debts. So, commercial papers are short term debts, right? Just 6 months. So, they have smaller interest rates. Whereas bank loans, which typically last 5 to 10 years, bonds, 10-year bonds, they carry a lot of interest rate. So, what should an NBFC do if it wants to make profit? It will try to sell a lot of commercial papers because it just has to pay smaller interest to those people who are bearing that commercial paper, while it will give long term loans to the people and businesses who need loans. Infrastructure companies, housing companies, they take loans for a long time, 5, 10, 15, 20, 30 years. Take money from here, give money to them, give them 6% interest rate, charge them 12, 13, 14, 15% interest rate. The difference, 5 to 10% of interest rate, is the NBFC's net interest margin or NIM, and that is how it makes profit. But there is a problem. If the company raises money for short term, just for 6 months, and gives money for long term, say 30 years, this person is going to come back after 6 months, right, and ask for money. But this NBFC, this does not have this. It does not have money because it has given away the money for 30 years. It's only going to get back the money after 30 years, and that is the problem of asset liability mismatch, right? So the durations are 6 months to 30 years, 6 months here and 30 years there. So not possible to sustain with that model, and that's why the model crashed. Uh, IL&FS defaulted on its debt obligations, and its credit rating went straight down to D from AAA to D. The rating agencies were criticized a lot, and due to this, IL&FS was seen as one of the top NBFCs, AAA rated. All the imagine the situation of all other NBFCs, all of them, barring a few, all of them almost. Uh, Ratings of all of them were almost under question. So, banks, mutual funds, other institutional investors, they started thinking a lot before giving money to these NBFCs. What to do? Should we give them money or not? Because you know, suppose a class of toppers and there's a class of 40 students and there is one topper and this topper fails in the exam. The teacher is going to think that the entire all the students are going to fail, and that's what happened in the Indian banking system. Then entire banking system started to believe that all of them are going to default, not just this topper. Since this topper has defaulted, all of them are going to default, and therefore they stopped giving credit, and that's how NBFC crisis started. There is no loan. NBFCs supported loans in automobile and infrastructure and housing, a lot of sectors which are crucial to the development of the country, the economy. And that has stopped, and that's how the NBFC crisis started. We are still taking the brunt of it. The mistakes could have been avoided. In another video, I'll talk about were credit rating agencies responsible for this. Uh, for this video, this will be all. Thanks a lot for watching. Thank you. Bye.